Hello friends, a very warm welcome to my channel. In this video we are going to talk about the flagship company of KP Group, which has created massive wealth for its shareholders in the last 2 to 3 years. We are going to discuss the business of KPI Green Energy, which is one of the leaders in the solar EPC business in India. The sector has huge tailwinds and till 2030 they have a clear vision and runway for growth. If you are new to the channel, please to subscribe and hit the bell icon to get updates of all the new videos which I upload. And if you are not a part of a Telegram channel, do join today by clicking the link in the description button so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market and I also share a lot of strategies which can increase your portfolio returns. So let's begin the analysis of KPI Green Energy. This will be the broad flow of our discussion. We'll understand the business model of the company in brief. We'll look at the stock performance in the last 3 to 5 years. We'll look at the main financial parameters. We'll discuss why the stock has generated massive wealth for the shareholders. We'll look at the outlook of the management going forward. We'll talk about the valuations of the company at present. We'll look at the risks of investing in this business and then we'll form an overall view after this analysis. So before I talk about the company, I would like to discuss some terms here which I will be using frequently during our discussion. So there's a term called IPP, which stands for Independent Power Plant. So solar projects can be of two types, IPP and CPP. So in IPP, what happens is the company, which is the KP Group for example, they set up a solar plant by themselves and they sell electricity to either public sector enterprise or a private sector enterprise in a long-term arrangement. So the entire project is not sold by them, only the power generated is sold by them. In the second model, which is CPP, which is the captive power plant, they do EPC for other companies. So on their orders, they set up a new power plant and they hand over the entire power plant after it is ready. Then we'll also discuss the capacities in terms of megawatt and gigawatt, and as you know, 1 gigawatt would be 1000 megawatt. And another number which I would like to mention here is if somebody is taking up EPC projects with modules, then the approximate cost of construction of a solar EPC project would be somewhere around 3 to 4 crores per megawatt, and without modules will be in between 1 to 1.5 crore per megawatt. So now let's talk about the business model of the company. Until now, this company has executed projects of almost 437 megawatts in its history, and out of this capacity 171 megawatt was from IPP projects, which is the project where they are selling the electricity, and 302 megawatts were for CPP project where they have acted as a EPC player. Now they have a capacity of nearly 2000 megawatts of power evacuation, which is once the power is generated in a solar power plant, it has to be transmitted to the grid. So that's called a evacuation capacity. So they have ample capacity for evacuation of almost 2000 megawatt, around 2 gigawatt at present, which is more than the power which the company is producing at present. In terms of land bank, the company has a land bank of almost 2700 acres, which is sufficient for the near term growth. And the company is also working on a hybrid model, which is wind and solar power together. Along with setting up the power plants, the company also has developed waterless robotic cleaning, because these plants which are set up cannot be manually cleaned. It is not practical for them to clean it manually because they run into many acres. So they have developed a robotic cleaning mechanism which can easily maintain this power plant. And once the project is completed, the company is also willing to take up the operation and maintenance part with their customers. The company has an in-house R&D team which focuses on developing latest technologies to be used in terms of the cell which is used in the solar power setup, then in terms of the modules which are used, because these technologies are still evolving and the efficiency with which the newer technologies generate power are much more than the older ones which were established maybe 5 to 10 years before the current time. Along with the setting up of the power plant, it is also important to monitor the solar power plant as to what is working, what is not working, how much is the efficiency of the power generated. So the company has developed a centralized monitoring system to monitor these things. So by this you can understand the company has developed an entire ecosystem for the solar power under this company. If you look at the recent quarter's revenue, they have generated 13% of the revenue from their IPP projects and a major chunk of 87% from the CPP project. Unlike other companies which usually don't have much of IPP revenue, this company has decent set of almost 13% coming from the IPP revenue, which is a higher margin business. That is why the overall blended margins of this company are much higher compared to the other EPC players. In terms of geography, the company so far has been concentrated in the Gujarat region itself, which is one of the business hubs in the country, and now they are looking at diversifying into nearby states. In terms of stock price, the stock has given massive returns in the last 2-3 years for the shareholders. It has made a top and now consolidating and trying to reach its support zone of somewhere around 750 rupees. And looking at the order book of the company, most probably it should stabilize around this price. The company had also done a QIP fundraise recently at 935. So for retail shareholders, now it is available well below the QIP price. In terms of revenue, it has shown a massive improvement from just about 59 crores in FY20 to almost 1000 crores in FY24. EBITDA has also shown a similar rise from 27 crores in FY20 to 337 crores, which is more than 10x in FY24. EBITDA margins have begun to normalize as the share of CPP revenue in the company increases, because that is a lower margin business they are doing on behalf of others. The EBITDA margin tends to normalize and reduce a bit, but you see that it has become stable at somewhere around 30% in the last couple of years, which we can assume to be the new normal going forward also. The company is in a growth phase, so they have been constantly raising funds in FY24 as well as 23. They have done a stock split from 10 to 5 rupees recently, and they have also given a bonus of 1:2 in 2024 itself. So 3 major corporate actions have happened in the company in the first 9 months of 2024. In terms of return ratios, it's doing decent at somewhere around 21% ROC in spite of so much debt. And the promoter holdings less than 50%, which is around 49%, and the promoters have pledged their shares to borrow funds, and the unpledged portion is just about 26%. If the company plans to dilute the holding further and raise fresh funds, then this can even go down lower than 48%, which we have to watch for going forward. The company has the high debt with a debt equity ratio of 1.24, which is more than 1000 crore debt on the balance sheet. And it is a high working capital intensive business with inventory days of 227 and debtor days of almost 150. The company continuously does capex, which impacts the PAT with a high depreciation, and as the debt is high, the interest cost also impacts the PAT margins of the company. In terms of free cash flow, the company has not been generating free cash flows because they have been continuously spending on their capex, and that makes the free cash flow negative, although the operating cash flows have been positive out of 2 years in the last 3 years. Now, why has the stock given such a rally? Because the sector came into the limelight with the government focus in the last 3 years. The company has a strong order book of more than 2 gigawatts. The company has shown massive growth in the last 5 years, as you have seen in the earlier slides, and the re-rating of the PE multiple has happened. Now, what is the growth outlook of the company going forward? As of now, the company has more than 2 gigawatts, which is almost 2.33 gigawatts of orders in hand, out of which around 1000 megawatts is from the CPP segment and 1260 megawatts is from the IPP segment. In the long term, up till 2030, the company aims to do execution of cumulatively 10 gigawatt, which is a very big number. As of now, the company is sitting at an execution of just 0.5 gigawatt, and from here they aim to do 10 gigawatt in the next 4 to 5 years. How will they achieve this? They will focus on the large scale projects which will have higher margins. They will diversify into different geographies, as they are concentrated in only Gujarat now. They will focus on a hybrid portfolio with both solar and wind combined projects, and during this journey the cash flows and tax savings from the IPP segment will help the company grow. So although the company has done well so far, the outlook from here onwards also looks bright, as they have a strong order book going forward. In terms of valuations, it is trading at somewhere around 54x of the trailing 12 months valuations and 11x price to book ratio, and market cap to sales of almost 9x. So definitely these valuations compared to the historical average are not at all cheap, but with the growth which the company is showing in the recent 2-3 years, if this kind of a growth continues, then these kind of valuations are sustainable going forward also. Now, what are the risks of investing in a business like KPI Green Energy? There is a geographical concentration of business in and around Gujarat itself, so that's a regional risk. Debt is high, so the company should look at controlling its debt, but the debt is high on account of the IPP segment, so they have assets, the debt which they have raised, and the money which is coming in terms of cash flow by selling of electricity is used to pay the EMIs. Execution risks for the orders which they have already taken, and risk of a strong order book going forward, whether the similar flow of orders will be there or not. Any change in the government policy in this sector, which can be a big risk to the companies operating here, and if there is a technology change and these current modules and cells get outdated and the company doesn't upgrade them, that could be a technology risk. Managing the working capital will also be a challenge for this company going forward to execute bigger projects, and the promoters should also look at removing the pledge sooner or later. So now that you have understood the business model of the company, you have looked at this financial performance, you have understood the growth outlook of the management as well as the risks of investing in this business. Now, what is our overall view on the stock? If you are already holding this company for a longer time, it is good to hold and give them some more time for execution, as the sector has immense amount of growth and new projects coming, and the company is bidding for good amount of projects. So there is clear visibility of growth in the company. And if you are looking at a fresh entry in the stock, definitely the valuations are not cheap. So you should look at gradual accumulation in the stock, which will give you margin of safety in case something goes wrong in the company. But overall, the future looks bright for the company as well as the solar sector for the next 3 to 5 years in India. So that's about KPI Green Energy. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want us to make videos on your favorite stocks, do mention the names of the stocks in the comment section. Join our Telegram channel by clicking the link in the description button, which is a free channel. Thank you for watching and have a wonderful day.